How's it going, everyone? It's Sam. BlackRock held a special private closed door meeting, and I think a lot of people have forgotten about this. Um, Really interesting. Gives you some insight into what they are thinking. Now, of course, you have to take this with a grain of salt because I wasn't there, but there are some interesting reports of this. Obviously, BlackRock is very pro Bitcoin. They've helped their clients buy $20 billion plus of Bitcoin. And Larry Fink, especially when the Bitcoin ETFs were launching in the first 3 months, was talking about Bitcoin constantly. Every single week it seemed like he was talking about how successful the ETFs were. And they did some stuff behind the scenes to make sure they were successful. If you don't mind, hit subscribe. Turn on the bell notification underneath the video so you can see future videos just like this. There are also links underneath the video in case you want to start trading on Margex. You can trade cryptocurrency there. As you can see, we are up significantly in our positions, 943%, 604%. Even the ones that are up the least, we're looking at 31%. That's just a Bitcoin 5x. So if you want to start trading cryptocurrency, there's the link underneath the video to that, where you can start trading without KYC and you don't need a VPN. So earlier today, I talked about why this was such a big day yesterday for the Bitcoin ETFs, BlackRock, Fidelity, ARK21, Bitwise, VanEck, Valkyrie. And I thought, wow, it's just so nice out here, so quiet. I wanna shoot another video and tell you about the secret meeting BlackRock had. Now, obviously, BlackRock has been buying the most amount of Bitcoin of anyone. On average, since they started selling this to their clients, they have an average inflow of 135 million a day. So yesterday is small compared to the average day. The average day has them swallowing up 2,123 Bitcoin. And for a lot of people, they might be thinking, okay, why is BlackRock going so heavy? Well, obviously, they believe in Bitcoin, but also they have the numbers to back it up. They actually held the secret meeting. This was a closed-door meeting. Let me actually read this to you. A lot of people forget about these types of things, but you have to remember, for institutions, it takes a while for them to feel comfortable buying something, even if they're told to buy something. They have to run it through compliance. They have to run it by, different advisors. But BlackRock, the world's largest asset manager, recently conducted a private event focused on Bitcoin, signaling a potentially transformative moment for cryptocurrencies within traditional finance circles. The insights from this event were shared with Stephen Lubka, the managing director and head of private clients and family offices at Swan through X, shedding light on BlackRock's approach towards Bitcoin and implications for investors. Overall, Lubka highlighted 4 big ideas that BlackRock shared during this event. The first key takeaway is that BlackRock hosted an exclusive event for its top clients to promote the spot Bitcoin ETFs. This supports the view that BlackRock is gearing up to use its marketing and sales machine to promote Bitcoin and ETF products. So what did they suggest? Well, the recommendation from BlackRock's quantitative analyst regarding the portfolio allocation to Bitcoin is perhaps the biggest revelation. Advocating for a 28% allocation to Bitcoin and in an investor's portfolio is not just a bold statement, it represents a seismic shift in how traditional investment firms view cryptocurrency's role in asset diversification. Now, keep in mind, he said BlackRock's own analyst recommended a 28% allocation to Bitcoin is not unreasonable. Now, this recommendation aimed at more conservative institutional investors suggests a strong belief in Bitcoin's value proposition and its stability as an investment asset. Okay, let me break this down for you real quick. And there's actually another report that said 86%, maybe even going into leverage. But this report is from a little while ago, to be clear. It is from, I think, March. But you have to remember, like I said, this stuff takes a while, right? These institutions aren't going to this event and then calling up their broker and then, calling up whoever's working at the office and saying, go put 30% of our allocation in Bitcoin. This takes a while for some of these clients. Now, some have gone really heavy. We've already seen a couple institutions and hedge funds. I believe one went 30% Bitcoin. So this is kind of crazy. But you have to remember, if BlackRock is saying this, they have already done a ton of research. right? It's not just one quant that's done, or one quantitative analyst that's done this research. It's a handful. It's a full team, right? They've gone over every possible situation, and they don't want egg on their face, right? What they're doing is causing, or is allowing their biggest clients, their best clients to get in first before everyone knows how bullish they are. And they did that even before this. They did that with their private fund like a year ago. We saw this recently with Morgan Stanley, where they didn't even start talking about this to their clients, like being able to sell this to their clients, until this quarter. But we just saw their 13F filing that showed that they already had a Bitcoin ETF allocation last quarter. So they're already buying before their clients. So we're going to continue to see this happen. And the interesting thing is, if they're saying 28% to major clients, what stops them, besides maybe some regulation, which I think they'll try to get around, they'll figure it out, what stops them from starting to allocate 3% in all their other portfolios? Not every single one, but the ones where it's applicable, right? They have 10 trillion in AUM. Maybe a tenth of that they put Bitcoin in, and they put a 3% allocation. There's $30 billion. That more than doubles what they already have. Now, I think they're going to go more aggressive than that, because if they're saying 28% to their institutions, I would not be surprised for them to put it in more portfolios, right? And put a larger allocation in them and kind of force the change, force more clients to buy. But this, again, this is how wealthy people get wealthy. They're connected to other wealthy people. Obviously, their money grows at a faster rate because they're able to shove more into investments. But like, if you had listened to BlackRock and put 28% of your portfolio in Bitcoin, well, Bitcoin's up 50% this year. So yeah, you'd be doing quite well. Now, I want to hear your thoughts. There's another report that talks about how one of their analysts thinks that it would actually be smart to put 106% of your portfolio in Bitcoin. And this is just the numbers, right? These are unemotional. This is assuming that you can hold on, right? You can hold on through the downturns. I'm not telling you to go out and buy 30% of your portfolio in Bitcoin. It depends on your own situation. It depends on your risk tolerance. It depends on your own emotional state. But so far, that would have been a pretty good idea if you had just bought throughout the bear market, continued buying, or even bought at the beginning of the year. You know, I think we'd be pretty happy with that kind of return. Now, if you want to hit subscribe, you can see future videos just like this. Again, it's important to look back at this, because we did have a big day from the Bitcoin ETFs, and people wonder, okay, well, you know, we didn't have a lot of big days recently. We kind of had inflows and some outflows, but you have to remember, BlackRock leads the ETFs, and they're not letting any outflows happen. It's either a 0 day or it's a positive day. And this is why they have signaled to their largest clients, this is the thing to buy. Especially going into a lower rate environment, I think we're going to have some major days ahead of us. Let me know your thoughts, though. Again, if you want to trade crypto, there's that link to Margex underneath, and I'll see you in the next one.